Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is a updated look at the euro versus U.S. dollar. We saw the dollar sell off rather sharply here in the morning session, but has since moved back to the downside over the last few hours of trading as well. And so big move to the upside, big move back to the downside, and move back into more of a neutral area ahead of the FOMC rate decision. Does that make sense? Probably. From a technical perspective, so let's talk about it. Of course, we have the FOMC rate decision at 2 p.m. and the Fed is expected to keep rates unchanged. What we have seen is we've seen sharply lower yields in the U.S. with the 2-year now down about 13 basis points. The 10-year is down around 9.4 basis points as I speak. We've also seen stocks move lower, especially in the NASDAQ index, which is down around 1.32%. That helped to send the dollar lower here, the price in doing so broke above the 200-hour moving average. That's the green line in the chart. We initially tested that level and then rotated downside and then broke through it. But we fell short of the 100-bar moving average on the 4-hour chart. That's this blue overlay line on this hourly chart. Recall from trading last week that the price moved up to and through that moving average line right here. It also moved above the 200-bar moving average at the same time. So both of those moving averages were broken here, and the price should have gone higher, but it didn't. It rotated back to the downside, and buyers turned to sellers. Here we are. We come up toward it, and we find early sellers. Since then, the price has moved back below the 200-hour moving average. That's this other green line right here, and we are now in between both the 200 and the 100-hour moving average. We are also just above the 200-day moving average. That's this green line right here. So we're more in a neutral area. Yes, the dollar sellers had their shot. They took that shot and they pushed higher. But when we couldn't get above the 100-bar moving average on the 4-hour chart here, the buyers turned to sellers and the price rotated back into more of a neutral area. That, what I think going into the FOMC rate decision is that the 200-day moving average is going to be the barometer, of course. And if we move below it, it's more bearish. If we stay above it, it's more bullish. Recall from not last week, but the week before, the price came down to that 200-day moving average and found support buyers here and here. And we also we broke below it here, but then reestablished that support here before moving to the upside. Admittedly, over the last 4 or so trading days, the price has traded above and below that level. But there was one last attempt to hold the 200-day moving average here before moving to the downside. And then ultimately the price moved above that level and found the buyers in trading here today. So 200-day moving average is going to be key. It's going to be the barometer that we need to watch. On the downside, if we do break below that level, I'm going to switch this to the 4-hour chart. I think you can see it better, but the swing area between this 1.0803 and 1.0824, the low price in trading here today did find support buyers against the low of that area right through here. That was a key hold and a key and represents another key level that would have to be broken if the price is going to go lower in trading through the FOMC rate decision. Following that is a 50% retracement of the move up from this low right here to this high. That level comes in at 1.07936 earlier this week. The price low came down to that level, got within about a pip or two of it before rotating to the downside. So, the levels are in play. We know the levels. The technicals are somewhat showing those levels to me, to the market, with the 200-day moving average a key barometer. On the top side, getting above the 100-bar moving average is key. Then we'll look toward the 200. On the downside, move below the 200-day moving average and look to get below the 03 level here, 50% retracement. And then the 100-day moving average would be another level to get to and through at 1.0773. That's the playbook. We'll see how it all plays out with the FOMC rate decision coming up at 2 p.m. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.